Welcome back, ladies and gentlemen. I'm speaking now with Peter McGuire, the CEO of XM.com. Peter, welcome. This morning we're looking at non-farm payrolls. We're looking at the week that was, then the week that will be. Talk me through it from your world.
Well, good morning, Will. We've seen a massive amount of news coming forward over the last couple of days, and it's going to be a big week as far as RBA, Bank of England, non-farm payrolls, and does Congress, more importantly, do they go on that holiday break at the end of the week, and do they actually get that move through as far as that 600 per week or approximate stimulus for all those millions of employees in the United States?
Well, it's a big new rescue package, and if we look around the world, I think the governments or the countries that have survived have really benefited from early government action. Yep. If we look at the US, a lot of people are worried that they're not going to get the package. What happens if they don't?
Well, if they don't, it's going to be dire, and that from a demand side and consumption is going to be just crimped like a hose. I think it'd be just a very, very solid shockwave through the whole system. So let's assume that that does go through, and for as a safety net, and more importantly for people putting food on the table for families, that it does get rolled through and we go back to the status quo a little bit and keep that moving forward. So that's the issue at hand. I think there's a confidence level that something will be done. It'll be cobbled together, but it's a work in progress and it's not over the line yet.
Pete, it's a big week in news. Non-farm payrolls are a thing that people watch, from time to time, and
Absolutely.
Actually, in fact, more than watch, they
live by.
They live by it. It's in the diary. It's the thing they look at. It's the thing that signals their buying behaviour or even their selling behaviour. Yes. Where is it at? What's next?
We've got to release this Friday, and what we've got to also understand is that those numbers are only till the second week of July. Now, there's been a huge amount of change happen in the last 2 to 3 weeks in the United States. Virus numbers are actually growing significantly. Second point is lockdowns have taken on board a number of those key states, and what happens to the consumption side. So from an employer standpoint, I think whilst we see a ratchet down as far as the unemployment number, is it really going to be the August-September number that we should be more focused on? And I would say yes. Probably September, October is where we've got to look, and that leads us into the election. But that's just another sideway.
If we look at where we're at the moment on the graph here on the screen, as you're suggesting, you're sort of coming off into July here. Not sure yet is what's happening yet, but it's come from very, very low base.
Yeah, absolutely. Well, we're around about 3.7, 3.8%, which was historically low. And, very strong economy when you look at it. That was the engine that was driving the world in a lot of ways. So we saw that huge spike up, as you see there in March, leading all the way through to 14.5%, 15% unemployment, and we've been coming down quite aggressively when you're looking at it over the last 2 to 3 months. Now, where do we look at? Is it going to flatline come into October, or are we still going to be on that trajectory down to the 7s and 8%? Only time will tell.
Pete, moving forward and a little bit closer to home, the Reserve Bank of Australia will be meeting this week. They're talking a little bit about stimulus, whether they do or whether they don't. What's your view? I think,
they've just got to keep their hands very, very focused on the wheel. I don't think any more stimulus, or in the sense of from the RBA, as far as cutting rates, they're just keeping their powder dry. Let's see what happens. Victoria's taken them back. I don't think there'd be an Australian out there that could have painted this scenario a month and a half ago. We were coming out, we were moving quite well, and there's your numbers there, and that gives you an idea from that graph as far as COVID cases, COVID deaths and so on. Mid-June, I think everyone had it on Main Street very much under control. We thought that everything was going okay, and have a look at that. It's just ratcheting up to very, very strong numbers even on the weekend, 650 plus coming out of Victoria. So that meeting on Tuesday, I think, it's going to be an interesting one, and I think the minutes will be very telling.
Back in England, if we look at what's happening in the dollar versus the pound, what's going on there, mate?
Been a very strong move, Will, to the upside for that UK pound. But remembering that US dollar index and US dollar has come under some severe selling pressure. So whilst we've seen the dollar off, naturally, we've seen pound go up. And if you just put your mind to it, the left, as far as that GB pound in red, it's been very, very volatile. You've seen that, 125s on the left-hand side there, all the way through now to around about that 131 level. We've seen that down and up. You've had Brexit talks, you name it. Everything has happened over the last best part of, 3 to 4 months. And now it's climbed very, very strongly. Then you're looking at the other side, of course, that US dollar index inverted. So it's had a very, very, that 102 on the right-hand side there. You're looking now at that 93 sort of, high 92.50.
So is it fair to say there's a sense of optimism despite the fact they're probably reeling a little bit from the management of the health crisis?
There's optimism more in the pound. I think that the traders are looking at it. We've seen that solid push downwards for the dollar, and are we going to see it go back to that 92.5 to 91? We haven't been at these numbers, just to put some framework around it. We haven't seen a low of this as far as the US dollar since Friday night. That's been the low of 52 weeks. So it's bounced off that low at 92.5. Going back only, over the last year, we're at 103. So it's a huge sell-off. And does it bounce from here back to, it's at 93.5 this morning in Asian trade. So are we back up to 94? Seems to be a bit of profit taking. You know what traders are like, and it's very, very volatile.
What would you be saying right now would be the signal that you should be looking for?
I think you've just got to see how the week plays out and where does gold play, because that seems to be the barometer. We had 209 during the morning trade in Asia on COMEX futures. Gold's back, that 2000 was 1985. I was at the office this morning at 7. By 8:30 it was at just on 2000. It's back at 1995 now. We had a high of 2009, so huge volatility swings over a matter of hours. So I'd be keeping a close eye on that, because that's the fear index, and that's what gives me a little bit of, I think, keep me very centred on the true picture of the world.
Look, gold's been a consistent story. Our conversations over the last month or so have really been bullish on gold. Gold. And it looks like it's still going. Every headline last week was announcing another resource company, developing really good stories around where they're sitting today, both with the reserve, with the sale, and with the export.
Well, exactly. We're up 11%, 11.5% in that 3 to 4 weeks. So that's a big move to the upside. You've had the US dollar come under pressure, as we've said.
Rates are low.
Rates are low. So, that storyline, I saw some numbers, Goldman Sachs, 2,300. The big banks are calling that there's plenty of firepower left in it yet. So as that momentum drives, I'm sure that there's a few dollars to be made from a trading perspective.
Plenty of individuals out there in the headlines, paper profits.
Yep. But you never go broke taking a profit. So there's plenty of traders out there that can, put the money in the bank and just look for other opportunities.
So talking unemployment rates in New Zealand, there's some conversations happening down there that the RBNZ might be talking the Kiwi down.
Yep.
Where's that at? What's that view?
Well, naturally, it's had a very strong move, and if you're looking at that, from a graph perspective, it was sold off all the way through to nearly 56 cents going back into March when everything cratered, US dollar went high, and now we're back at 66. So thinking that's about a 18-19% move to the upside in 5 months, or in 4 months. So that strong move, bit of profit taking now, and I think that the potential to be a 64.5 play. Let's just see where the dollar trades at the moment. I'm saying US dollar, because like anything, King dollar has had the wind knocked out of it over the last matter of a month and a half to 2 months. And that's very evident by the cross rate there with the New Zealand dollar.
Look, in Australia at the moment, we're seeing the rise of the numbers in Victoria. They're kind of putting a bit of a brake on the Reserve Bank's position in terms of calling back a recovery.
Yeah, I think they are. It's taken, I think, everyone by very much surprise, and the numbers are very, very damning. So what happens tomorrow is a realisation we're sitting at historic lows, 0.25 for that RBA cash rate. And there you go, the assets. So they've got the assets and the firepower there to make sure that we can try and keep food on the table for people. Let's see how we are as far as October, November. I think it could be a very, very tough Christmas for a lot of people.